Hi guys, this is Tula from the Part-Time Trader, and this week we are going to do a stock portfolio review, specifically my stock portfolio review. So let's get to it. Now, if you guys are new to my channel, my videos are entirely for me to document my learnings and hopefully for you guys to also learn from my mistakes. So please don't take me for a guru as I'm not recommending any financial advice. I'll use my first stock, Apple, to maybe explain to you on what my criteria is in picking stocks. Yep, so this is the chart of Apple, and I remember making the purchase. I remember buying Apple at around 142, just at the lows here of early 2019, and I was very lucky here to be able to buy at such a low price. And why I actually bought it was because of this huge sell down here nearing the end of the year. I don't really remember what contributed to this sell down, but I think a lot of tech stocks also sold down accordingly. And why Apple? Actually, it could be Amazon and it could be Facebook. Because actually I saw this negative movement in most of those stocks. So I just picked Apple because I really like their products but no real fundamental reason behind them. So let me give you the reason as to why I purchased Apple after this sell down, because it could very well go even lower, right? Could very well go even lower over here. Yeah, so if you go to, this is the daily time frame, which means that the candles are dictate one day. But however, if I go to the weekly time frame, each candle would dictate 1 week. So the first thing I look for in a chart of a stock before I make a purchase is it getting higher consecutively over the years. And if you look at this chart of Apple, since actually 2005, you can see that this price in 2005 is above this price in 2000, right? This was a dot-com burst, and this price was above this price, and subsequently it did manage to make higher prices over here in 2012 and continually over the years. So one good reason why I purchased here was because it was a sell down, but it managed to take out the previous high in 2015. So that's reason number one. And another reason is if I can pull out this MA, which refers to moving average. You can see that, okay, so how this moving average is calculated is by taking the past, so this is weekly, right? Okay, let's go to daily. Okay, so you take the past, let's say for example, a 10-day moving average. Okay, so this is close 21, close 50, and close 200. So close 21 simply means that I'm taking the average of the past 21 days. So let's say today I'm at June 18. So for example, at 7 June 2018, the price is 193. So I average the past 21 days, I average it, and this will be this black line, the black line is 10. So the green line will be the 21 average of the past 21 days price factored into this line itself. So basically 193 plus the remainder 21 days divided by 21 will give you this price. So this moving average is sort of a baseline for the stock to move. And what the stock does is that it mainly goes high and then comes back down low and then goes back higher than the previous high over here, right? The previous high over here. So if it can go above this previous high over here, likely this stock is a strong stock, because no stock will go up indefinitely, right? It has to go up, come down. But if it can go up above its previous high, this means that the stock would have strength, right? Investors continually have confidence in the stock. to keep outperforming its previous year. So for example, if this year it's 10,000 in revenue, next year could be 12,000. So investors have confidence in such a stock. So if we apply that theory to Apple, right? So this is all just what I feel, my personal opinion. So if we apply that to Apple, we can see that number one, as I said just now, is always beating its previous year's highs, right? It's always beating its previous highs. And number two, it always reverts back to the mean. And in this case, the mean I'm speaking about is this weekly 200 close. So this pink color line, so you can just open TradingView, or you can go to I think investing.com and just key in moving average, MA, and you put in the 200. So 20, 50 and 200, they are more common moving averages that people use. So you can see that the second reason why I purchased it is because likely when the price touches the 200-day weekly moving average, it will mean revert. Mean revert meaning that it will go back to the sort of fundamental price by going down, and then after that it will take a wave up. It will go all the way up, right? And then it will go back to its mean. Okay, go back to its mean, and then continue going up, as you can see here. So it happened many years for Apple, right? It always touches this pink line and always sold and always bought back, went back up. So I thought that this strategy was good, and it could be applied to the 2018 sort of correction in Apple. So which is why I purchased here, and I'm very, very thankful that and lucky that it has managed to hit all-time highs, even after the COVID crisis. So this is basically the strategy that I apply to most of the stocks that I pick. Okay, so you've just seen how I actually pick my stocks based on the first reason of being higher than the previous year. So higher than previous all-time highs, getting higher and higher, and also mean reverting back to the moving average. So now let me just share the totality of the technology stocks in my portfolio, because today I will just mainly share about tech. As you can see, most of my portfolio is in tech, 82% of it. The other 17% is actually in different industries like pharma, airlines, and also consumer staples, but we'll focus on tech for today. So as you can see, Facebook is actually my largest position. If you had purchased Facebook when the boycott was going on, it was actually at a discount, and now it actually recovered quite a bit. So Facebook was a good buy for those that took the opportunity. However, you can see that what is special about technology stocks is that the percentage return year to date is mostly quite spectacular compared to the other stocks in the market. And I think this is because the tech stocks, no matter, despite of the COVID situation, will continue to do well because it doesn't involve large crowds and also human-to-human interaction, and it's mostly what is needed for our day-to-day lives. For example, like Apple, Facebook, Microsoft, eBay even, you use it day-to-day, right? And the last two, you see at the 1, 2, 3, 4, 5, 6, the 6 and 7 column. The 6th column is an ETF. This ETF is CQQQ. Yeah, you can purchase it on Fund Supermart or even Saxo Capital. So this CQQQ is an amalgamation of all the tech stocks in China. So one very important thing for me was that I didn't want exposure in financials or oil and gas in China, which is why I purchased only tech stocks. So I wanted a tech ETF. And then on the last column, which is the ProShares Ultra Pro QQQ, that is actually that's actually Nasdaq, but it's a levered Nasdaq, meaning that if Nasdaq went up by 1%, this ETF will go up by 3%. So that's taking a larger share of risk. So there are those are the 82% of my portfolio. And going back to my point just now about falling due to COVID-19. So I think every single stock in the market wasn't spared by COVID-19, except maybe Zoom. So if you can see here on my fifth row, the percentage fall due to COVID-19. So COVID-19 caused a lot of stocks in the US market to continue to drop since the 10th of Feb 2020. So you can see it's red across the board. However, one interesting thing to note is that while other stocks, for example, oil and gas and airlines, continue to remain hurt, and even financials actually, if you go and check JP Morgan or Citibank, they're still quite badly hit. But for tech, for the percentage return as of 5th July, which I took the prices, you can actually see that there's actually spectacular return after the low of the crash. And the last row, percentage return, COVID effect plus Fed easing program. So the Fed easing program is basically the Fed committing to purchasing stocks even. So they used to purchase bonds, but now they even purchase stocks. So that effect boosted the market a bit. And so so this last row is actually the outperformance compared to the previous high, meaning that Apple is 12% higher than its previous high as of 5th July, even though there's COVID-19. So that was especially interesting to me because I didn't know that tech stocks could recover so quickly and even outperform after this crisis. And you can see the biggest winner here. So Apple, Facebook, and Microsoft, they're actually part of FANG. They average maybe around 5 to 15% outperformance compared to previous highs. But if you look at eBay, is where the outperformance really comes at 41%. And yeah, Chinese tech stocks are also recently, just I think the past week, getting higher and higher. So yeah, that's basically my portfolio so far. So that was a rundown of my investment strategies and my tech portfolio so far. So all I want to achieve in this video series is actually just to document down my investment journey so far and hopefully continue learning along the way. So please don't take my videos as financial advice because I am not a financial advisor. If you like this video, do subscribe and give it a thumbs up. And in my next video, I'll be reviewing the other portion of my portfolio, which is non-tech stocks. And so I'll see you guys then.